Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 20th, 2024, and we're diving into BERY's latest earnings report for the fourth quarter and fiscal year 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss BERY's performance, especially after their strategic moves and the recent merger with Glatfelter Corporation.
Revenue and profitability overview. Let's start with the top line. BERY reported net sales of $3.2 billion for the fourth quarter, which is a 3% increase from the previous year. John, what are the key drivers behind this growth?
The increase in net sales was primarily driven by higher selling prices and a 1% organic volume growth, despite the impact of completed divestitures. All segments, excluding the divested health, hygiene, and specialties business, showed positive volume growth, which is a testament to BERY's strong market position.
And how did this translate into profitability?
Operating income for the quarter was $269 million, a decrease of 11% year over year, mainly due to higher restructuring costs and depreciation expenses. However, BERY's adjusted earnings per share came in at $2.27, slightly beating the analyst forecast of $2.25, which is a positive sign of their operational efficiency.
Strategic initiatives and spin-off impact. BERY recently completed the spin-off of its health, hygiene, and specialties business, merging it with Glatfelter. How does this strategic move position BERY for the future?
This spin-off allows BERY to focus on its core strength in consumer packaging solutions. According to CEO Kevin Kwilinski, this move is expected to result in more predictable earnings growth and cash generation, enhancing the company's stability and resilience.
What are the anticipated benefits of this new focus?
By concentrating on fast-moving consumer goods, BERY aims to accelerate organic growth, increase margins through improved operations, and continue deleveraging. This strategic shift is designed to deliver enhanced value to shareholders.
Segment performance and market trends. Let's delve into the segment performance. How did BERY's different segments fare this quarter?
The consumer packaging segment in North America saw a 7% increase in net sales, driven by 3% organic volume growth. This was largely due to strong demand in food, beverage, and personal care markets. Operating income in this segment rose by 32%, thanks to a gain from the sale of a facility and acquisition earnings.
And what about the flexibles segment?
The flexibles segment experienced a 2% increase in net sales, with growth in North American consumer films and some recovery in European markets. However, operating income decreased by 29% due to higher restructuring costs and a negative price-cost spread.
Cash flow and shareholder returns. BERY has been quite active in returning capital to shareholders. Can you elaborate on their cash flow and shareholder return strategy?
BERY generated a robust free cash flow of $854 million for fiscal year 2024. They returned $260 million to shareholders through $120 million in share repurchases and $140 million in dividends. Notably, the board increased the quarterly dividend by nearly 13%, reflecting confidence in the company's cash generation capabilities.
How does this align with their financial strategy?
BERY is committed to reducing leverage while simultaneously returning capital to shareholders. Their ending leverage was at a historic low of 3.5x, and they plan to continue this trend in fiscal 2025, balancing debt reduction with shareholder returns.
Future outlook and guidance. Looking ahead, what guidance has BERY provided for fiscal year 2025?
BERY has set an adjusted earnings per share guidance range of 60.10 to 6.60. They expect cash flow from operations to be between $1.12 billion and $1.225 billion, with free cash flow projected at $600 to $700 million. The company is focused on accelerating organic growth, improving margins, and further deleveraging.
What are the key objectives for BERY moving forward?
BERY aims to enhance shareholder value by focusing on three main objectives: accelerating organic growth, increasing margins through operational improvements, and continuing to reduce leverage. These strategic priorities are expected to drive sustainable growth and profitability.
Key takeaways. In summary, BERY has delivered a solid performance in the fourth quarter and fiscal year 2024, with strategic initiatives setting the stage for future growth. Their focus on consumer packaging solutions and commitment to shareholder returns are key highlights. John, thank you for your insights today.
Thank you. It's been a pleasure discussing BERY's performance and outlook.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on BERY's performance in the comments below. Until next time, happy investing.